Prateek Agrawal joins us. Let's connect with him and let's take our conversation forward in terms of where markets are and how things are stacked up. Prateek, after the recent run-up, how do you see the market moving in the near term? And what really could be the next big trigger for markets to stay afloat or even to go higher?
No, so in the immediate term, we do expect some bit of consolidation, given that the rains in this period has been good, which means quarter two, the economic activity would be a tad impaired because of that. So as results come in, I think we should expect markets to be sideways. Long-term trend doesn't change. I think all the themes that we are talking of stay. So this is a time when in a quarter, if market doesn't move anywhere, valuations correct by 4 to 5%, which means in the next period we should look for some gains. Now, what is also happening is that in this period, the new issue calendar, QIPs, etc., is pretty heavy. So, space would have to be created for them, which again should result in market staying flat.
When you say in the near term you expect markets to consolidate and the long-term picture is intact, how does one know that how much of the good news in terms of the long-term price trends, long-term earnings is not currently getting built up? I mean, okay, the trajectory is higher for the economy. That's what we can predict. But how much of that good news, as we say, is in the price? And how much of FY25 and 26 and even 27 earnings are getting discounted? What is the best way to understand that?
So I'll give you a thumb rule. Okay, large caps, practically everybody agrees are priced fine. They are at 10-year averages. Now, we believe if at any time one can make a case for markets to trade higher than long period averages now, earnings growth is more than long period average, and discount rate, the other variable that goes in, has started to come off. So both the variables that go in are there. Now, mids and smalls is where people get concerned with on valuations. So just have a thumb rule, 1% higher growth in earnings sustained for 10 years is 5% higher valuations. So my sense is mid caps are building in 10% higher valuations. Small caps are building in, 10% higher growth. Small caps are building in 3% higher growth. To us, it seems like sustainable, given that lot of the newer spaces which have happened, just like software happened in the 90s, where growth is high and will stay high for long, belong to these spaces. So our sense is it shall sustain, but just as a thumb rule, investors can take their own call. 1% higher growth for 10 years is 5% higher valuations, and judge for themselves whether it is sustainable or not.
Right. Prateek, that's exactly what I wanted to pick up on. The fact that the BSE Tech has shown the kind of resurgence that it has, it's already scaled up year to date, what, over 25%? And you guys as well have conducted a detailed study, right? Tell me what the observations are on whether or not there is more meat to this move, and does it look like it's going to be sustainable?
So that study would have been done by our institutional equities. It's not our part of the business. But if you're talking tech services, we do believe the larger names will grow significantly lower than index earnings growth. And we have stayed away from that pack as a house. Mid and small have many bottom-up stories where growth trajectory could be sustained for a long period of time, and that is where you found us invested.
Okay, fair enough. But let's also get in your take then, Prateek, as to what the outlook is when it comes to the entire consumption space as well. Given that there are talks of a rural rebound, what is the outlook as to how you're expecting earnings growth to shape up, or do you think that there will be more negative surprises?
No, so let's get a few things in place. Do we expect consumption to be growth leader over the next few years? No. Can consumption bounce back in the immediate term? Yes. Now, why we don't expect consumption to be the engine of growth for the next few years, well, we liken this period as the period of 2000 to 2008, where capex drove economic growth, unlike 2008 to 20, when consumption drove economic growth. But in these long periods, there can be a period, where rains are good, where, oil prices are down, palm oil prices may be down, and the consumption pack shows a better earnings profile, and the market celebrate. So that can happen. But longer term trends typically don't change for a quarter or two. That can come and go. In terms of how we are positioned, we as of now are not there in staples. We are there in what we call luxury consumption. So higher end stuff, jewelry kind of stuff is where we are invested.
Prateek, let's talk about some of the themes which currently are at play. There is EV on one side. There is a big move in manufacturing. Some are talking about green and clean. What are you betting on in terms of a new, big theme? Like consumer tech, fintech, like buying Zomato or Policy Bazaar was buying an internet theme. Are there any other powerful themes for 3 or 5 years which you're ready to align with them right now?
No, so all of these spaces that you spoke of, we are invested. Not yet in the EV space. We need to see some more time as numbers come in and we see losses reduce. But otherwise, these are the spaces that we are invested in. We liken this period to, like I said before, the 90s, when software as a large industry, not in the index, delivering very strong growth, both in quantum and period for very long period of time, happened in the same manner, electronic manufacturing, renewables, EVs, new tech, and maybe manufacturing with China plus one and defense, etc., have all come up. These are spaces which find a very strong presence in practically all of the portfolios that the house runs. Now, there are new things which are happening. It could be, power transmission, HVDC, etc. So as you get into renewable and that capacity scales up, you need to evacuate that power. So transmission will also show an increase. We are looking at a space like data centers, for example, but haven't really found companies which are investable. So spaces happening, themes happening. This is a period like no other period that at least I have seen over last 30 years. And when so many new spaces happened all together over last 3-4 years. So we say this is time for alpha, be with the newer spaces. That is where growth is cleaner, except that, one would have to be watchful for who is winning and who is not, because in newer spaces, winners and losers can change. So that's a risk, but otherwise, this is the future.
Prateek, Motilal Oswal AMC has just come out with a defense fund also. And it was, yeah. And after that, we've seen a big reversal in some of the defense stocks. It just could be a coincidence. But the grain of the truth here is that suddenly defense stocks are down 25 to 30%. What happens to this defense theme? And where is this entire basket headed now?
No, so in all of our actively managed funds, one should expect to find some investment into defense. We continue to be positive there. Depending on how the fund manager is thinking, 2.5 to 5% or maybe 7% also exposure to the defense fund, defense space you will find in most of our actively managed funds. So that should indicate to you that we continue to be positive. Now, yes, there has been a period when ordering has been a bit soft. That was expected. But now it has picked up again. If one looks at the secularity of growth over long period of time, I think this is one space which will deliver a secular 15+% growth in practically all of the participants, and that is more than what the index average is going to be. So we stay pretty positive on the space. The downtick that we are seeing could very well prove to be a big opportunity.
Great to have you on the show. Thank you so much for taking the time out and speaking with us today.
Thanks.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.